Hi, my name is Purushottam Bhandari and my student number is EMB80784. Today I am here to do the video presentation of the subject corporate accounting in the topic accounting for income tax. In this topic we have to choose the business, one of the business group of the Australia, and I have chosen Woolworths group. Let's start with the introduction. Woolworths group is to gain an insight into accounting for taxable income as the retail sector in Australia is growing at the rate of 5% and turnover rose to 0.3% during 2019. The report analyzed different definitions of accounting terms, recognition criteria for deferred tax assets and liability tax expenses and current tax liabilities assets and temporary difference. This also summarizes interesting and confusing understanding at the ends and streamline the current amount for income taxes. Let's explain about the recognition criteria. As per IS 12, the deferred tax liability is recognized for all taxable temporary difference that arise when the carrying amount of an asset is higher than its tax base or the carrying amount of liability is lower than its tax base. The recognition criteria of a deferred tax asset involve deductible temporary difference, unused tax losses and unused tax credits to the extent that taxable profit will probably be available against which the deductible temporary difference can be utilized. Let's explain about the tax expenses. The income tax expenses for Woolworths Group in its latest annual financial statement 2019 unfolds 668 million, which is 6.9% lower than last year. The last year was like 792 million recorded. The total income tax expenses charged to the group currently owning for taxable profit and future income taxes recoverable or payable in respect of temporary difference. Now let's explain the company tax rate times Woolworths accounting income. It has been identified in the Woolworths group. The income tax expense is calculated using the Australian corporate tax rate of 30%. The accounting income of Woolworths group is measured at 2,227 million during 2019, which was clocked at 2,394 million during the previous year. It has been found that company tax rate times Woolworths accounting income as the effective tax rate is calculated by 30% during 2019. Now let's explain about the deferred tax assets and liabilities. It has been investigated that Woolworths has recorded net deferred tax assets of 311 million in the latest financial statement, which is 40% higher than the preceding year 2018, where it was reported 271 million. The demonstration of deferred tax assets is 990 million during 2019, with a 5.3% surge in the previous year 2018, that was 940 million. It has also been calculated that Woolworths Group has 679 million deferred tax liabilities with a 1.5% increase during the year. It has been observed that deferred tax liabilities varied slightly during 2019 as compared to the previous year 2018. Let's discuss about current tax assets or income tax payable. The current tax liability is the amount payable in tax entitlement concerning current taxable income. The current tax assets are those refunds or recoveries that are expected to be received from previous paid in taxes. The portion is narrated as current tax assets. Current tax liabilities as reflected in its balance sheet is 84 million, which is lower than 110 million recorded in the previous year. The Woolworths Group has formed a tax consolidation group that has articulated a tax funding agreement in respect of income tax consolidation group that has articulated the tax funding agreement in respect of tax income tax accounts. The agreements require payment by the subsidiaries equal to the income tax liabilities assumed by Woolworths and are required to make payment to the current tax assets assumed by the group. The franking credit amount is to be as stable at the end of the period under income tax payable, which is observed to be decreased to 1953 during 2019. Let's go for income tax expenses and income tax paid, like it's income statement and cash flow statement. The income tax expenses shown in the income statement differ from the income tax paid shown in the cash flow statement. The income tax reported in the income statement is 668 million, which is lower than the previous year 2018, that was 792 million. The timing difference between financial accounting and tax accounting create temporary differences. Temporary differences and permanent differences. The temporary difference is the difference between the carrying amount of an asset or liabilities in the balance sheet and its tax base. The temporary difference give rise to deferred tax assets and categorized by as taxable temporary difference and deductible temporary difference. It has been observed that Woolworths Group has temporary differences in the calculation of income tax, which are reversible in future, including deferred tax calculation by employing balance sheet method and measures at the rate that are expected to apply in the period in which liability is settled and is likely to ascertain the ability of the future taxable profit. The Woolworths Group has deferred tax asset liabilities of 271 million. Now the treatment of tax. The Woolworths Group is increasing to extend and deferred tax liabilities and deferred tax assets are articulated and categorized in the financial statement and supported to interpretation of justification of recording. The company tax transparency report develop an insight into a company high tax rating and determine the tax expense concerning effective income tax report. And the tax transparency report broaden the conceptual understanding of Woolworths account for income tax as a result of examining firm tax expenses in accounts. So in this presentation, I explain about the accounting of taxation with the conceptual scanning of the Woolworths Group, latest annual report 2019 and 2018. I hope this presentation helps to understanding the complexity of tax structure by interpreting theoretical understanding about accounting profit, taxable profit, temporary difference with the categorization of the taxable temporary difference and deductible temporary difference, deferred tax asset and deferred tax liability. The whole presentation reveals Woolworths tax expenses, deferred tax liabilities and assets, current tax assets or income tax payable accompanied by temporary and permanent difference. The presentation summarizes the accounting for income tax and identify the complexity encountered while interpreting the financial statement of the Woolworths Group. Thank you so much.